Welcome back to the Isn't That Rich podcast. I'm your host, Jill Franks.
And I'm your host, Ashley McVicker. And today we are diving into one of the most overlooked parts of accepting a job, and that is job benefits.
Yeah, so you've got this job offer, it looks like a great salary, exciting title. Maybe even it's your dream company, somewhere you've always wanted to work. But before you sign your offer letter, let's ask you something. I think this is an important question to ask.
Yes. So it's, what about the rest of the benefit package?
Yeah. Today we're talking about benefits. So it's the part of your compensation that you don't see in your direct deposit from week to week, but this can really make or break you in your financial future. Your mental health even can suffer because of it, and even your work-life balance, some of these things.
Yes. Most people look at the salary first. I certainly know I did. But the number you see isn't always the offer. So I'm really excited today to break down benefits, because let's be honest, when you're first getting out of college, or even sometimes on your second or third job, you get in that meeting with HR, and if you're anything like me, you had to call your parent and say, should I get on their health insurance? What is health insurance? I don't know. So I think there's a lot to consider past the salary when you are getting a job.
Yeah. And let's just talk about that, because one of the biggest mistakes people make, I think, is say you get two separate job offers but one's higher salary and one's less. Yeah. You automatically think, let me take that higher salary. And that can be a huge mistake. We just assume that higher number is going to be the best choice. But many people who take that higher offer end up regretting it later in life.
Yeah. And a lot of the time when people get offered a higher salary, not all of the time, but, the company may offer poor health insurance, no 401k, or low PTO. And so we're going to go through 6 of these different, benefits, compare things, and maybe it will make people think about, their current position, or if they're looking for a job right now, you can go into an HR meeting confidently and be like, what is the actual full benefits package of this?
Yeah, that's such an important thing to ask. I think it's fun to look at examples too. So say you get this high salary offer and it's like, okay, $85,000 annual salary. That looks amazing. Like if you were to get offered that in Southern Illinois, that you'd be set, right? But if you're spending $800 a month on health insurance premium or whatever that is to insure your family, you're paying thousands out of pocket. So that's actually $9,000 a year just in health insurance, right? So when something happens, that could really set you back. And so that $85,000 might sound high, but when it comes down to it, does it really compare when you talk about other benefits?
Absolutely. And not to mention, if they don't offer you like a 401k plan, like you could be leaving money on the table, because a lot of times companies will offer you a match and benefits, and we'll get more into that. But you can't always be salary first thinking. I know it is like the shiny thing that everybody looks at. And while it's great, like you don't want the lowest salary for sure, because you still need to get paid. But
and I think this relates to a lot of things in life. You look at the biggest number, the best rate. When it comes to banking, you want the lowest interest rate on your home, but there might be a lot of other fees or things that come to it. So not only with your benefits package, but a lot of other things in life, don't always take that immediate number for what it's worth.
Absolutely.
Look at the things behind it. So what are the things that actually matter when looking at your benefits package? We can talk about the first thing that comes to mind.
Right. It's health insurance.
Yeah.
I mean, that's like the biggest topic, and probably the number one thing that most employers offer as a benefit to their employees. But it can definitely get confusing. There's different options. We're going to go through those. So
I mean, I didn't even know what a premium was when I was starting out. I didn't know what a deductible was. So I think like the first thing we should do is really define what some of those things mean before we talk about different options, right? So when you look at a healthcare plan, there's 2 different things. You either really get a PPO or an HMO, and a PPO is a preferred provider organization. So it's a type of healthcare plan that gives you more flexibility. So you can see doctors in or out of network, and you don't really need a referral. It's usually more expensive, but it's more convenient.
probably the better of the healthcare plans. Well, the other one is an HMO, which is Health Maintenance Organization. It's more restricted. You can pick a primary doctor and you need referrals to see specialists. It's cheaper, but you have fewer options. So it's kind of one of those things.
Yeah.
The best rate, the best value.
Yeah. A lot of bigger corporations probably offer an HMO, the Health Maintenance Organization. HMOs are more common what you see.
Well, it's so confusing when you take your job and then you are going to the doctor and we talk about this all the time. Like,
is your doctor in network?
They're like, do you have a PPO? I'm like, let me get this card out and look at all of these different ID numbers and group numbers. And I don't know. Can you not just tell me?
Right. Here, I slide that insurance card across the desk and
just take a copy of it.
This is what it is.
This is a sidebar, but I think it's crazy when you go to a doctor's office and they go copy your insurance card and then they give you a clipboard and then you have to handwrite out all of your insurance information still.
I know.
Okay, people, this
You're
is
like,
just...
I just gave you that info. But.
Yeah. So we've got PPO and we've got HMO, and now we're going to talk about premiums and deductibles because these are things that's going to come up in your HR meeting.
Yes.
So a premium is basically what you're paying up front to have this plan.
Yeah, it comes out of every single paycheck. That's your premium.
Yeah.
So the money so if you look at your pay stub every month and you see like the premium deductible, that's how much they take out of your paycheck to pay for your insurance.
Pay for the insurance that's hopefully going to pay for your issues.
Right. So a lot of companies, like Farmers does a really good job with this, it's 100% employee covered. And so there's nothing that gets taken out of your paycheck every week.
Which is huge because when I talk so I have lots of my friends, I tell you, work at a healthcare company, and it's astounding to me that they'll work at a healthcare company and don't have, and maybe that's
100%
silly.
coverage.
Yeah, 100% coverage. I think that's silly.
Yeah.
But I mean, it just is what it is. But you know, I my friends will be talking. They're like, I think you're kind of like the outlier in this. Like, lots of companies don't pay for people's health insurance. I'm like, what?
Or not 100%. Like maybe you have like a lower premium or a lower premium or, but yeah, most companies don't pay 100% of employees coverage for sure.
So maybe the company pays 50% and then you have to pay the other 50%.
Right.
And while that's still nice, 100% coverage is much better. So that's one thing to consider when you're going to get a job.
Yeah. What is the premium? Ask that question. And the next one we kind of mentioned is a deductible. Now, this is the amount you pay out of pocket before your insurance starts covering things.
Yeah.
So
I know I've looked at our deductible before, and you can see it like on our app, and it'll have a little bar of the money you've spent, your own cash that you've spent towards your health, that until you hit that, you gotta pay that money on your own.
Yeah, some companies have like, it's a $3,500 deductible, or it's a $500 or $5,000 deductible. So just depending on
And the way I remember it too is if you have a higher premium, you typically have a lower deductible. If you have a lower premium, you probably have a higher deductible.
Correct.
So it's just maybe apples to oranges, apples to apples. I'm not sure, but
yeah.
They're kind of flip-flopped, but those are two phrases you're going to need to know is your premium and your deductible.
Yeah. So the next thing is an out-of-pocket max. And this is important too, because this is the most you ever have to pay out in a year towards your insurance. So after you hit that number, the insurance company pays 100% after that. So like kind of like your deductible. When you hit that out-of-pocket max, you're done paying. Insurance is going to take over 100%.
Yeah. I talked to someone at work and they're like, I already hit it in February. So I'm making all my appointments for the rest of the year.
Right.
Like, good
and
for
that's
you.
important too. Like out-of-pocket max, like if you have a bunch of things you want to have done, like I remember when I got my tonsils out. So I was still on my parents' insurance at this point, and I think I was like 21 or 22, and they're like, okay, get it done before the end of the year because we've already hit our.
I know, that's what my mom said. She's like, if you have anything wrong with you, tell me now so we can get into the doctor.
Yeah.
And I didn't understand those things until now that I'm after 26 and I have my own health insurance. Like,
yeah, you want to get it all done in that year.
I'm like calling all the doctor's office. Like, I don't even have something wrong with me. And I'm like, I think I'm going to go to the GI specialist in November. That's so good. Yes. I think too, don't forget to ask, does your plan cover dependents? Right. So once again, when you're sitting down in that meeting, you first get that job, like, hi, I have 3 children. Does this plan cover them? How much more do I have to pay every month to cover my family? Or, so that's something to look at too. And I'll mention also, maybe you have the option of not taking that company's healthcare insurance if you have a spouse and maybe they have better insurance. So that's a note to always look between and compare the two.
And what's less expensive for you. I know that's what my sister does. So she's on her own healthcare plan, and then her 2 boys are on with their dad on his healthcare plan. It's just cheaper for them to stay separate, but they're under his.
Yeah.
So just interesting how things get set up and how it works for each
but you have no idea how much money it could save you. So it's worth just sitting down and having those conversations.
The two. Yeah. Yeah. Even if she were to go on his plan and not accept hers, it would be more for them. So it's just easier to do it the way she did. So I find it interesting. I think it's fun to look at real life examples of what healthcare can amount to be. So let's just call this girl Sarah. So she's a 33-year-old married woman with 2 kids, and she receives 2 different job offers. So job offer A is...
She's got $85,000 salary, a high deductible health plan that costs her $650 a month. No 401k match, boo, and 10 PTO days a year.
Yeah, so that $650 amounts to $7,800 a year. So just keep that in mind when you're looking at $85,000 salary. So then we have offer B. So she gets $76,000 annual salary. She has low premium family coverage for health insurance. Her employers match her 401k up to 5% annually. She has 18 PTO days and 2 work from home days a week. So she gets to work from home 2 days. That's amazing.
So when you do the math, Sarah actually makes more money with offer B. And I know, because we talked about this beginning, everyone looks at that shiny salary, but she actually makes more money with offer B in premiums, retirement, and in time. And even though it's $9,000 less on paper, it's worth more in the long run.
Yeah.
So you got to do the math.
But if you would have looked at it right away, you just assume 85 is more.
Right.
Take that offer. But no, we're going to look at healthcare plans.
Yes. So the next thing, I love talking about this, which is a 401k.
Yeah.
People need to be looking at jobs and looking at their retirement and taking advantage of a 401k if they have that opportunity.
Yeah. And it's not just about having a 401k plan is great, but if your employer matches, that's the magic, right?
Yeah.
So if your company matches, like Sarah had a 5% match of her salary, and she's not contributing that 5%, then you're just leaving money on the table. And so maybe we should explain what that means, what a match is.
Yeah.
So in a 401k plan, an employee can pay into their 401k up to a certain percent. The employee will match that amount. So say I put in $5,000 or 5% of my salary towards my 401k. Well, my employer is going to do that same 5%. So say 5% of my salary is $5,000.
Right.
They're going to put the other $5,000, and now $10,000 a year goes towards my retirement, which is a huge leg up.
I mean, it's free money.
Yeah.
That's what people don't realize. And when we have our meetings with our 401k advisor, she's like, if anything, do the match, because you're getting double the amount of money.
Right.
For doing nothing
Yes.
besides putting money away.
Exactly. So one thing with a 401k when you're starting a new position is you have to look at the vesting schedule. So I feel like a lot of people don't understand what vesting means.
Yeah.
This essentially just tells you how long you have to stay with the company before the money is matched, or like before the money that's matched is officially yours.
Right.
So your company might start paying you that 4 or 5% 401k match, but that money is not completely yours until a certain timeline is up.
Right. So you may not be, you'll hear phrases like you'll be 50% vested by 2 years, you'll be 75% vested by 3 years, and then by year 4, you may be 100% vested where you can keep 100% of that match.
That they're
if
putting
you
in.
left after that, you could move it, roll it, whatever you want to do. That's a whole nother conversation. But yeah. I don't know if I ever had the conversation about vesting. Do you remember that?
And I think with our company, it's 100
right away.
Right away, which is a great thing. So you didn't have to wait for it. But there are companies out there. I know a couple of friends that started, and it was a 10-year vesting schedule. So it's a long time before that money. They just want to keep you as an employee, right?
I understand.
So yeah, it's important to look at that. PTO and paid holidays are another big benefit.
Oh, I feel like this is huge with, I don't know, Gen Z maybe.
Yeah.
I feel like that was a big thing. They really, you see these like Facebook articles that are like, Gen Z cares way more about time than they do money. Yes. And I understand because, I mean, I love taking time off. I don't think people realize how much, like, how valuable that is sometimes.
Yeah.
And so if you're working at a job where you have to rack up time off and you're just basically working to take time off, I mean, I don't know about you, Jill, but I just don't think I want to do that.
No, it's paid time off is so important. Paid holidays are so important. And make sure you understand how many total that you get every year.
Right.
And what that means. So with the bank, we get holidays off. So the bank is closed for specific days, bank holidays, government holidays, which is amazing.
We love a federal holiday.
Right. We don't get those every year because the holidays change what days they hit.
Right.
But when it's 4th of July is on a Friday this year, we get Friday off. Yeah. And we don't have to take a day off, which is an automatic 3-day weekend.
In some of the last couple of years, they were like on a Saturday and we're like, this sucks.
Well, I've worked retail jobs before. I worked for a company where I would have to work holidays and weekends. Yeah. And that really does take a toll on you when you only get your PTO's days off. Like, I mean, it's so hard to be able to take a vacation or go visit family. You know, the days that you have off are not aligned with the days other people in your life might have off.
Right.
That's hard.
So that's something you should ask. Okay, is my PTO, is that time going to be taken out of my, if I take off on a holiday, even if I'm allowed to take off on the holiday, are you taking that out of my PTO, or do we just get that as a holiday?
Correct.
So like the best example I can use is our job. We get the holidays off outside of our PTO, which is beautiful.
Yeah.
And then in addition to that, we get paid time off for vacation days, and then we get sick days and bereavement days and
thinking about paternity leave and maternity leave. So if you have a child, what kind of leave do you get for that? Do you get any pay time off? You know, you're not even required to give that in the United States, which I think is interesting. You're not required to give paid time off for that leave.
Absolutely.
So make sure that you know what's actually paid and what's not.
Might as well just do another example. I feel like this is the best way to look at it with money. So we have to look at PTO like it's worth actual dollars, because at the end of the day, it is. And it is for the company as well. So you can't forget that. So we'll act like you have a $60,000 a year salary and the company gives you 15 days off PTO. So it's like 3 weeks of paid time. That's fabulous.
Yeah.
So that is worth $3,450 worth of time. So that's like getting an extra paycheck and a half just to go not be at work.
Right. That's incredible.
Yeah.
And some companies, even the longer you stay with them, the more paid time off you receive, which is great. I know after like 2 years, 3 years, and 5 years, I think you get more time off with our company. I'm not exactly sure what that is, but it racks up the longer you're with the company, which is just an added benefit.
Yeah. So. Added benefit to the company to keep you, and then an added benefit to you to say, hey, we're rewarding you for staying with us.
Yeah.
So definitely look at PTO and paid holidays when you are in your meeting.
For sure.
When you're deciding if you're going to take this job.
This next one, disability and life insurance. We like to talk about this
one.
Oh,
this cracks me up kind of. Like, it's not funny, but when I worked as a receptionist when I got out of college, and I knew nothing. Like, I just made like $12 an hour, and that was good enough for me. And I remember we had a meeting with Aflac, and this guy is just like, yeah, your employer is giving you money towards like an additional add-on, an additional benefit. And so like my options at my pay were like, I could get disability insurance, which is not I'm not trying to laugh at it. It's just funny because I didn't know what it was. And so I went home that day and I was like, hey, Mom and Dad, I make $12 an hour and I have disability insurance. Like,
they're like, oh, good.
They're like, okay, girl. Good. But
yeah,
it is so important. It is something to think about with disability insurance, because at the end of the day, if you become disabled and you cannot work, I hope you can get unemployment, but this is the best safeguard to put in place for you and your family if you get hurt or get sick. Yeah. And it's not even that expensive.
No. And there's a number out there, Ashley, we've talked about this before. I think it's 1 in 4 people will become disabled before they're 29. So short-term disability. So 1 in 4 people, that's a pretty high statistic. 25% are going to become disabled for a certain amount of time.
I mean, that's a staggering statistic.
Yeah. And I mean, I think it can just be just a safeguard for you. Like you're going to get some sort of income during that time where you're unable to work.
Absolutely.
And that's not even talking about, I think we should talk about life insurance too. If your company provides life insurance, that gives your family a payout if something happens to you. So this could be a huge financial benefit or safeguard for you, because if you're the main income provider for your family and you know, you get in an accident and something happens to you, like having a life insurance policy to be able to replace that income for a specific amount of time is huge for your family.
And once again, like, I don't think people realize this. Disability insurance and life insurance are not that expensive, especially like if you're in a company, like I know for us, we do them as an add-on. You go have a meeting, they might be $11. Like I know a disability policy was like $11 a month. I mean, what is that for you to get maybe 2/3 of your salary every month if something happened to you?
And I think people hear the word disability and they don't understand what that means. So that's like if you break a leg, you have a surgery, or maybe you have a difficult pregnancy, or just you can't work for several weeks at a time. Like this is where this kicks in and you'll still get like 60 to 70% of your income.
And I'm thinking about, okay, some people may be like, I can cash in my sick days and my PTO, my vacation days, my bereavement days. If I, something happens, if I do break my leg or do something that, you know, I will bounce back from, I'll just cash in all those things. Yeah. What if you pass that amount of time? I mean, you might as well have it.
I remember we sat down with my sister-in-law. Do you remember that, when she was talking about her pregnancy and she had some complications after she had the baby?
Super unexpected. And it always is.
And so she was able to take her short-term disability days on top of her mat leave to extend her time off so she could actually be present with her kid, because for the first couple of weeks she wasn't able to be there. So, I mean, just having that option is huge.
Gosh, I'm thinking like the last thing you want to be worried about is your money, and could go on and on and on about it.
Yeah. So look at disability coverage for a benefit.
Yeah. And also if you didn't have that conversation up front when you got your job, just go ask your HR person. I'm sure we have like biannual meetings with ours that we have the opportunity to opt into those things. So it's always an option.
So when the AFLAC guy comes to visit your office, or the retirement planning person,
just go talk to him.
Go have a meeting with them. It's important and it's a benefit for you. It's like your company's paying for that service. So
I remember you came into my office and you're like, the life insurance person is here. I know you don't have any dependents, but just go sit in there. And I was like,
I'm not
fine. Like, I'll go sit in there.
But when you're young and healthy, you don't think.
Yeah, you really don't.
You're just unstoppable.
You really don't. But like, even the girl that came in, she was talking. She's like, even if nothing happens to you, you could have this policy. She goes, I have mine as a savings plan. So there's so many different options. Just go hear people out. That's my best advice.
Go to the meeting.
Yeah, just go to the meeting.
Yeah.
Oh, I love this next one. Does the company give bonuses or profit sharing?
Yes. And what does that actually mean? Like bonus and a profit, like, are they guaranteed?
They're not guaranteed, Jill.
Right.
So this is kind of one of those things, like if the company is doing well and they are a profit sharing company or a company that gives bonuses, they'll give you an excess amount of funds because maybe you hit your goals for the quarter, you hit your goals for the year, you knocked it out of the park, or they're making such substantial profits that they want to be generous and share it with their employees.
Right. And so I think it's important to ask these questions when you are in that compensation conversation, when you're being like looking at a offer, job offer, like how are bonuses given out? Are they guaranteed? Like those are questions. Like, is it a flat amount? How are they calculated? Is it off of performance? Or is it like just here's $1,500 a year and or is it a $25 gift card to Target? You know, it's not many companies actually offer bonuses or profit sharing. And
I know I've talked to some of my friends at workplaces and they're like, yeah, we got a $25 gift card and for Christmas. And they're like, kind of just feels like a slap in the face. I'd rather just give it back. I'm like,
I know. Or like, here's your ham and bean dinner at the end of the year. Right. Like, so, it can be a huge benefit at the end of the year.
It's such a benefit. Yeah. I mean, it really is. And so that's another one of those things that you can, instead of just looking at that salary, if they have bonuses that you can go after and grab and do a really good job, you might be earning more at a different company than you could at a company that has a set salary, and that's just what you get.
I think it's all about your motivation too. So if you are paid a bonus by how well you perform or like how many sales you bring in, if there's a percentage of sales or whatever that looks like for your compensation package, like you should go for a job that is highly compensated based on your performance. And then there's people that scares the heck out of them. I don't want to go for a job or be my salary based on that. I'd rather just clock in 9 to 5, you know, they do their job and go home, you know? So
I'm kind of the same way. I'm like a little scared.
You're a little scared of the bonus.
Like what if I don't make a sale or something?
Right. Or people that are only commission based. Yeah.
Things to think about, but bigger risk, bigger reward.
That's right. I think this next one, it's called flexible hours or remote work, has really become important the past few years.
Yeah, I started to say this is like definitely a newer one. And it's weird coming from, and that's why I say like the Gen Z, and maybe I'm Gen Z. I don't know. I think I'm like on the line. I think I'm like on the line. I'm both.
Yeah.
I'm bold, Jill. I'm so cool. No, and this is what I was talking about earlier, but people care about flexible work hours and they care about remote work and they care about being home sometimes when their kids are home in the summer or just having those opportunities to kind of move their schedule around, which I personally think is fabulous. But in another world where we're so trained to go to work this time to this time, you know, it's kind of hard to get out of that. And so I think there's an interesting shift in society with like flexible work and these newer companies, and these are the things we offer. So it's definitely a benefit to look into if that is something that
is important to you.
Well,
I think about how important it is to have that flexible scheduling. This is not just like, I'm going to work from home. Like this is if your kid has a soccer game and you want to jet out of work an hour early to go catch their game.
And then make it up somewhere else.
Make it up later in your time, or I have a doctor's appointment, so I'm going to take a late lunch to be able to fit that in. Is that allowed, or are they strict on you have to be in your desk at 9 a.m. and you do not leave until 5 p.m. You get 30 minutes to clock in and clock out for your lunch, and that's it, right? So just a company that's more rigid, you want to know about that up front so you can set your expectations for how you show up every day to work.
Yeah, because honestly, I think that's kind of... Everyone talks about their mental health, but man, if you're scared to death at your job because you're going to be 1 minute late back to work, I mean, heck, we know how all this road construction is in Southern Illinois. Like,
right. Well,
half the time your main road's closed anyway, but I think that's super important.
Yeah.
And that is just another thing that I didn't think to ask about. Thankfully, all my jobs have been like wonderful where I feel like I've had really wonderful employers. I mean, I can't complain about any of them, but like I said, some of my friends are just like,
Yeah. I think it's depending on the job you're applying to, it also makes a difference. So I think about the different positions, even at the bank, the tellers and our customer service team has such less flexibility as the marketing team does when we're out and about all the time. You know what I mean? Today we have a chamber luncheon that we're going to for an hour and a half over lunch. It's for work, but also like we have the flexibility to get out and go where we need full coverage because of customers coming in the teller line where they don't have that flexibility to get out and go. We like to allow them as much as we can, but also like the position you apply for is so dependent on your hours as well.
Gosh, this is just so good. I'm like, money isn't everything. People always think it is. And then you think about these wonderful perks. And I'm like, oh, I would just have that any day.
I think there's lots of other perks besides this. And we can cover those too. It's something people don't think of as often.
Yeah. I think a couple of those are tuition reimbursement.
Mm-hmm.
I've actually never seen that at one of my jobs, but I do know that is out there.
Yes. I think McDonald's does that.
Yes. A lot. Yeah. A lot of my friends in college worked at McDonald's and they were like,
oh, they pay for some of my schooling.
Yeah. Or I think Starbucks maybe does it. And so, I mean, gosh, that's amazing. Wellness stipend. So a gym card. I think that'd be great.
Yeah.
Maybe Farmers State Bank. Charlie, you listening to this? Maybe we could get one of those. Childcare credits.
Yeah.
That's huge. And financial wellness programs. So,
That's
maybe meeting with an advisor or workshops, online tools that you have access to, like those little perks can add up.
Yeah. I think let's talk about what each of these are, because people might have never heard of a tuition reimbursements. The company actually pays you or to go to school, like approved classes they will pay for you to get those credits. And maybe it applies to the career path they, are bringing you down. So whether it's maybe you're a receptionist at a real estate office and they're paying for your certification to go get your real estate license, right? So maybe that's what that looks like. They'll pay for that for you, to be able to continue on the career path here to eventually get ahead in the company, right? So stay there longer.
They're essentially investing in you.
Correct.
So that you'll stick with them and be a good employee.
Yeah.
I talked about wellness stipends. So this might not just be they're buying you a gym membership. They might give you an allotted amount of money towards, and you can either probably accept or deny that too, but maybe to a gym or a wellness app, like a fitness app. I don't know.
It's so funny. When I was in real estate, our company, the healthcare plan said if you went to the gym 12 times a month, they would pay for your gym, so that every month they would get a monthly report of how many times I went to Lifetime Fitness. And
you
if
go in and just beep in and pop out.
You could literally
do
that, but it's
Jill.
dishonest. Yes. You want to go get your full workout in, but it does pay for them. Their insurance, their health insurance plan will go down if their employees are healthy and being active. So
that is just wonderful.
Isn't that great? I know.
What a great idea.
I know. I've mentioned that to Charlie before too. And he's like, oh, I'll look into that ... No, I'm just kidding.
Oh gosh.
But you mentioned childcare credits, and we have an entire episode of childcare costs and what it is today. And it helps you pay for daycare or after school care. And they may come in the form of pre-tax benefits or direct financial support.
And that stuff's expensive.
Yeah. I mean, it's...
What was it, like $14,000 for one kid?
And that's one kid here
in Southern Illinois.
It goes up exponentially other places. So
definitely another perk to look into. And then finally, I mentioned financial wellness programs. This can include free access to financial advisors, budgeting workshops, or online tools that help you manage your money smarter.
Yeah. And we try to offer that, or partner with businesses to offer that for them, where we actually go into a business and teach them about finances and how to manage some of their finances.
I can't remember the number on it, but it's something like 4 out of 5 people in their company do not feel financially literate. And so, I mean, what better gift to give your employees than like, okay, I'm paying you. This is how you use the money I'm paying you with.
Yeah.
And people just don't know. So
people don't know how to manage money, and we were never taught that in school. So it can be a huge benefit. This is something we haven't talked about, but working at the company that we work for, I think it's one of the most important benefits, and that's company culture. And this isn't something you'll see on like the benefits worksheet. So if you're offered a benefits package, it's not going to say great company culture, no one ever quits here. It's like it's just as important though.
If it wrote that on their ads, I'd be like, that's a red flag.
Suspect. Yeah. But this includes like your values, the expectations that they set for you, and just the overall vibe of the people that work there and how they work together.
Gosh, how do you guys manage conflict?
Yes.
Because there's going to be conflict.
Is leadership supportive?
Right. And are you working in a company? We talk about this. Okay, so you may have 20 PTO days.
Yeah.
But if you have that feeling that you're going to get a terrible shift because you took 2 days off that week, that they're going to basically stab you in the back or reprimand you or make you feel guilty for taking the benefits that are rightfully yours, like, then
it's not really a benefit, right? So like if you're not,
it's totally not a benefit.
If you don't feel like you can go use those, then it's not a benefit. So you might offer all this time off, but then if everybody's afraid to take it because the leadership's terrible or makes you feel guilty about things, and that's not a place that I want to be working.
Heck no.
No. So I think you can ask that, like, what is the company culture around, utilizing this PTO? Like, it's a great question to ask when you're talking about benefits
Absolutely.
package.
And I'm thinking if they sit there and they kind of like hem-haw around and are just like, I don't really know, I'd be like, that's probably your answer to, if you care about that.
Yeah.
I mean, if you're someone that doesn't feel guilty taking PTO, and you shouldn't, go for it, I guess. But
yeah. And that's another thing is like, how often do we meet to do or like evaluations? Like how do you give me feedback as an employer? Like, how do I know that I'm doing a good job? I think that's an important thing to ask too when it comes to company culture. Like, how will my performance be measured? Huge.
Big time.
Yeah.
I saw a chart a few weeks ago about the people you spend your life with, and it went through like kids, and that kind of like trickled down because they grow up and they move out.
Yeah.
And it's like your spouse, and it was kind of like at a lower level, and then it was like your friends, and then your co-workers was the top. I mean, for like 40 to 50 years, the amount of people you spent time with. And like what we know is typically the 6 people you spend your most of your time around, that's who you're going to become. And so I think if you're staying at a company for a really long time and you want to do that, that is something you have to ask yourself. Like, do I want to become like these people?
Are they inspiring?
Are they inspiring to me? Are they going to make me a better person? Because at the end of the day, I don't think work is just about the money you make.
Yeah.
If you have terrible quality of life.
Exactly. Fulfillment comes in so many different ways, and it's not just the bottom line, the salary that you get paid.
Right.
Company culture is a huge impact on that.
Absolutely.
So I think let's walk down a full benefits package and go through a couple of examples.
Okay.
So Marcus is his name. He's 29 years old. He's single. He lives in a metropolitan area. He's career focused, doesn't have kids yet, and he's looking to build long-term financial stability, but still has the flexibility to travel and explore. And he gets 2 separate job offers.
So job A pays Marcus $75,000 a year, but it offers no retirement match, a high deductible health insurance plan that costs him $500 a month, and just 10 days of PTO. There's also no option to work remotely, which means he's commuting in city traffic 5 days a week. So that's also time and gas.
Yes. Sitting in traffic. Well, no, sitting in a city traffic is the worst. Like, have you ever driven through Atlanta?
I can't even drive to Marion.
During rush hour.
Yeah.
So job B to Marcus gets paid $68,000 a year. So on paper, it looks like it's a step back from the $75,000, but the employer offers that 5% 401k match, which equals $3,400 a year based on his salary. The health insurance premiums are only $150 a month, so that's only $1,800 a year with a much lower deductible. And he gets 18 PTO days, and he can work remotely 2 of those. So 2 out of the 5 days he's hanging out at home and not stuck in traffic.
Dang. That's awesome. So with job B, he gets nearly $6,000 a year in combined 401k match and healthcare savings alone. And that doesn't include the value of those 8 extra PTO days worth another $2,600 in the time and costs saved from fewer commute days, like we said.
Yeah. So when you just compare the 2 for Marcus, job B gives him much more flexible lifestyle, which is one of the things he valued. Yep. It puts more value in his pocket long-term compared to job A, even though the salary is lower. And that's why the phrase total compensation matters in a job interview. Mm-hmm. So it always look beyond the salary for that. Mm-hmm. So I think it's important that we give you questions. So we're going to give you a list of questions of what to ask when you're discussing your compensation package. We kind of went through them all, but here's the list of them. And I think it's a delicate situation when you're doing job interviews and you're discussing this. So you're not going to do this when you sit down for your first interview, right? So this is further down the road. If somebody came in, Christine Hankins and I do a lot of our group interviews and interview potential employees. And if somebody came in and was like, what's your total compensation package? Give me all of the things. I would be like, okay, this isn't the job for you because I don't feel as though you're interested in Farmers State Bank. You're just interested in what you can get out of it. So it's a delicate line to walk, right?
Right. And we've had people in interviews, like their first couple of questions are like, they'll go, well, I just really care about time off. And that's okay. I'm not saying don't care about time off.
Yes.
There's just a time and a place to say these things. So it's not always about what we're saying, but it's like, well, when are you saying it?
But when it gets time, when you're discussing, you get a job offer and you are, further down the line, maybe it's a second or third interview. And this is like getting down to they've interviewed you, you like them, they like you, you've interviewed them, you like what they're telling you. Mm-hmm. Now let's discuss the finer details. So the first question you're going to ask is that question.
What's the total compensation value? So this includes the benefits, not just the salary. So literally all of the things that we went over today, those 6 things, PTO, health insurance, all of the things.
Yeah.
What's the total compensation number?
Yep. So what will it cost to insure my family? Don't just guess, get the actual numbers so they can help you. They can have you sit down with HR and go through those things.
Mm-hmm. Third is, when do the benefits start? So some may start on day 1, some start day 30, 60, 90, and then also don't forget about those vested questions too when it comes to like 401k.
Yeah. Ask about the culture and the PTO. Ask about your time off, what that's going to look like. Is it actually used? So are people encouraged to take time off, or is it frowned upon? So we already discussed how important that is, but that's one thing you can definitely ask.
And a final question is there room for me to grow? So can I get raises, bonuses, promotions? What is the path for me to go in here? And if there isn't one, it's just another thing to consider.
Yep. So I think the raises thing is a good thing to ask too. So are raises built in? Do you account for more than just the inflation rate?
Right.
Like, well, how do you consider that? So yeah, some good questions. We can include those in the show notes. Maybe we'll put a couple more.
Put a downloadable PDF for you in there.
Yeah, there you go. Now, at the end of the day, I feel like your career choice is a financial decision. And your salary is just that one line, and it shouldn't be your final deciding factor.
Yeah, I wouldn't fall for the biggest number on the paper, because at the end of the day, like, we've done a million examples today, and now everyone's equipped to know that these certain things may add up to more than what the salary is going to give. And this big salary may actually take more things away from me.
Yeah, absolutely.
Really good.
So if you know somebody who is interviewing, or maybe you're negotiating a job offer, maybe send them this podcast episode. Maybe they could get something out of this. Or even if you're reevaluating, like maybe you haven't looked at your benefits package in a long time, like sit down with your HR manager and go through it and see what all you're kind of missing out on. I know there's a lot of things, even with our health insurance, that I know Jared does a really good job of this. He's like, we have 2 free therapist appointments every year. We have, did you know that
we have a
have
nutritionist? I'm like, what?
We haven't looked at that. So your benefits package might offer you more than you're utilizing. So it might be time to take a look. So,
yep. Well, this has been wonderful. Yeah. I know I learned more today, and
Definitely.
I love my job and I'm going to stay at my job, but man, I kind of like want to go interview somewhere and just ask them all these questions.
I know. See what kind of benefits you can get.
Be like, well, what about this, that,
Do
these,
you
and those? I'm gonna go sit with Matt.
Gym reimbursement.
I'm gonna go sit with Matt, so I can just go, get this out of my mind. Exactly. This has been wonderful. So I hope that you all learned something today. And like Jill said, we hope you share this episode with maybe your child is going out and getting their first job after college, or you're renegotiating some things at work. So this has been wonderful. And thanks for listening. We will see you next week. So Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. We'll see you next week.
See you next week.